look at the next piece, capital gains. So I buy a house for £100,000 on average. They double every 8 years in the UK, but let's say it takes 15 years to double. So 15 years, and now it's worth £200,000. Okay, another 15 years, and it's worth £400,000. Let's assume we then sell the house. Okay, so we sell the house. I'll go back to these guys and reverse roles. So Colin doesn't sell the house, and let's say John does. So John sells the house, and the government come along and say, well, you've got to pay capital gains. You're a 40% taxpayer, so it's 28%, £84,000 tax bill. By the way, if you're a 20% taxpayer, which you won't be by then, but it's still £54,000 tax bill. So he sells the 400,000, he pays a tax bill, he pays the estate agents, and he's left with about £300,000. Colin says, hang on a minute, you told me never to sell, principle number 1. So what do? So Colin refinances it. He borrows 75% of what it's worth. So if I borrow 75% of 400,000, that's 300,000. So Colin ends up borrowing 300,000. He has £300,000 in his bank, same as John. What's the difference? The difference is Colin still owns the house. John's lost it. So we both got £300,000, but Colin still owns his. Does that make sense? It's not a trick question. Colin still owns it. He owns it for another 15 years. And guess what? They double every 15 years. So his £400,000 house, now, what do you think it'll be worth when they double again? 800,000. And whether Colin is in it or not, I hope he is, but another 15 years after that, the £800,000 house, him or his family will own it. What will that be worth? 1.6 million. So because John sold the house, he and his family have just missed out on £1.2 million worth of growth. Never ever sell your investment property. Never sell your investment property. I'm literally telling you to take these properties to the grave. Die owning them. I mean, all these people in the 60s and 70s, and they're busy selling off all their investment properties to sort things out and paying massive capital gains bills. It just drives me crazy. I'm like, you need to die first. Die first. Now, I don't mean die early. Just die when you're planning to die and let the properties be sold later. There's something called, and you can Google this later, capital gains tax washout. Capital gains tax washout. What is this? If the property, say I pass away and I've got a house that's worth 800,000 and I bought it for 100, so me and my family have made a £700,000 gain by this time, and I pass away, on my death the capital gains tax gets written off. Written off. No one has to pay it. I'm not going to I'm not going to come to inheritance tax in a minute, but it's just written off. If I sold it the day before, I'll just pay 28% tax on 700,000, a couple of £100,000 in tax. If I die first, then no capital gains tax to pay. So why would you ever pay capital gains tax? It's crazy. Okay.